Alright guys, alright. Just real quick as a reminder, this call is public for anybody to be tuning in, guys. If you guys want to share this link with anybody who may benefit from it, we're going to be covering everything we shared yesterday and a lot of what happened this morning. And we're going to dive into all indices and just how everything really correlated really well up until this point. And yeah, guys. Yeah, good evening. Yeah, hola. Thank you guys for tuning in. I appreciate you guys. Yeah, I appreciate you guys a lot. So we'll talk to you guys here soon. And in a few minutes, in about a minute and a half, I'll be tuning in for you guys. And yeah. I hope you guys enjoy today's lesson. I have a lot of really cool things to review with you guys. So let's get it. Drop some 7s in the chat, by the way, if you guys can hear me okay. All right, let's get some 7s in the chat if you're ready for this lecture as well. All right, guys. All right. Cool. Yo, what's good, everyone? Happy, I think it is Wednesday still here. Yeah, it's still Wednesday here. And even in Eastern time, it's still Wednesday. So, happy Wednesday. Grateful to be here with you guys. And I think I always start it like that. So I'm going to switch it up. So welcome to the Inner Wealth YouTube channel. My name is Bastion, for those of you who may not know me. Okay, I know I don't say my name often. I don't introduce myself often enough. So for those of you who are new on the channel, my name is Bastian. And guys, if you are not already doing so, the handle on my Twitter is right here in the midsection of the screen, on the bottom midsection. I highly suggest that you follow me on Twitter if you are not yet doing so. Now, if you don't have Twitter, I will give you one really good reason to get Twitter. My trading journal is in narrative is live on Twitter every morning before the market opens. Okay, so if you guys haven't yet hit that follow button, I highly encourage you that you do. Okay, tuning into the YouTube and Twitter hand in hand is going to give you probably the best experience. You can see the comparisons on Twitter, how I do my analysis, how I call out certain areas, how I wait. You can see the patience, the executions, the exits, targets are all predetermined. And then here on YouTube, you can see the review, the lecture, the mindset, the narrative, right? So yeah, I feel like you get the best of both worlds when you dive into both the platforms. So yeah, guys, let's dive into some charts real quick. Cool. Got 15 people. Cool. All right, guys. So yesterday when we were here, we were actually looking. We were pretty far below this. I guess I wouldn't say pretty far, but we were below this previous monthly low. Now, if you guys didn't watch last night's stream, I highly encourage you that you do. Now, you won't be too lost because I will be reviewing everything either way, but I encourage you that you watch last night's video before all of this actually played out. Okay, that way you can see the bias, the narrative, and like my train of thought when I did break down the charts before that actually played about. So you guys can see here, the month of April got taken out, the high of April, and that was the overall objective for this week. Now, I do think that we can go a little bit higher. I thought that my thought process was this is the range. 50% is about that insufficiency there. So this was my thought process. Okay, was that because we're in discount of this whole range, we're 50% and below this whole range, targeting a discount, having a discount target, right? Having an accumulation and discount and targeting something within that discount frame would have been very logical, very easily to achieve, right? So I was looking for something that was hanging very low, easy to achieve. Okay, so it happened to be that previous monthly low. Because if I'm looking 50% and above, I mean, you're looking at this high here, and on the monthly, I mean, you're looking at the actual highs. So it just made sense for me to target something that was a lot closer because it was more easily achievable. Now, I still think that 50% is going to be easily achieved. You always have to think like lowest hanging fruit when it comes to your weekly objectives. Okay, so now on a daily perspective, okay, on a daily perspective, you guys can see, yesterday we talked a little bit about this, but you guys can see, look, lower low, lower high, lower low, right? And then you have this lower high and a failure, two failures basically to create a lower low. Right? And we failed to create a lower low, and we created, in fact, a higher low. Right? From a lower high to a higher low, we shifted market structure. This is a perfect example of a type 2 accumulation schematic. Right? If you guys don't know about Wickoff, that's the schematics I'm talking about. I know we don't talk about Wickoff specifically because I don't go into like all the. I used to be really big into Wickoff, and I used to look for every single part of this schematic, and personally, like I can tell you guys, you can do that, and it's very, very profitable. I know a lot of really good traders that use that style, and they're some really, really great individuals. One of them is Fibs and Profit. If you guys don't follow him on YouTube, Fibs and Profit, okay? But the way that I learned later on in my years, okay, was simplifying it. And so then I came across Matthew. Trade with Matthew, he at Abundant Capital. If you guys aren't subscribed to that channel, he goes live every single week, every Monday through Friday. Okay. And so when I ran into Matthew, he taught me the very simplistic way of looking at accumulation. Okay. And then I made it into my own. So between the two people that have taught me Wyckoff so far, this is what I've came with. And there's two types of accumulation and two types of distribution, to keep it very simple. There's one that accumulates, okay, creates a lower low, lower high, right? We're coming down from up here, and then we create a lower high, and then a failure to create a lower low. Or actually, let's do this one first. Lower low, lower high, lower low, higher high. That right there is a type 1 accumulation. Comes with a break of structure and a sweep of the previous low. Okay. A type 2 accumulation is lower low, lower high, higher low, higher high. And then you get the nice test. Okay. So that one's a little bit different, as you guys can see. It's a little bit different in comparison to the other one, but that's the one that we're experiencing now. It's the failure to create a lower low. Now, remember last week, I was pretty bearish until those equal lows, until we hit Thursday. Once Thursday hit, the end of Thursday, it was clear that we were going to go for this high. And of course, we were aiming for more highs from there. And it was more, once this shift in structure was very likely, right? That's when I was like, okay, this is clearly a failure to get a lower low. How do we capitalize on on this whole move to the upside? Because indices don't want to, remember, indices are having a hard time dropping. So what really lines up is when you have a bearish day, or you have some level of retracement on DXY, right? And so when DXY is coming down, indices will pump up with more ease. Right, so you want those two to line up around indice longs on this really long uptrend that we're going on. And then also you want some DXY shorts. Now, it doesn't have to be a short day for you to be able to get shorts out of it. So I'll explain that here in a little bit. Okay, so you guys can see. Sorry. Okay. Anyways, before I move forward, actually, can you guys drop some threes if that accumulation made sense? The schematics made sense? Everything to keep it very, very simple, okay? And of course, it's vice versa on bearishness. So it's higher high, higher low, higher high, lower low, lower high, right? We get the sweep of liquidity, the break of structure, okay? On a shift of structure, on a type 2 schematic, distribution schematics, it's a higher low, higher high, higher low, lower high, lower low, like that. Okay, we get a shift in structure, no break, and then we get that return, right? So basically there's no spike on that type 2 schematic. Okay, and then Monday we were looking for longs, of course, on DXY. Monday and Tuesday we were looking for longs. Monday was a really short day. Indices didn't really do much either. The longs were, to me, on NAS Monday, were the only ones that really made sense. Everything else struggled. So if you did participate on NAS longs on Monday, you know, shout out to you. If you're still holding too, sheesh. Yeah, no, that's monster trades right there. But yeah, if you did participate, awesome. We did accumulate from this daily imbalance, and we were targeting this high first, and we hit that yesterday during London. Kind of want to bring that to you guys' attention too. Yeah, we hit that area, that high right here during London, right? And so that was the next high that we were targeting. I don't know if you guys remember that. We were down here when we were on our technical Tuesdays. We were basically like right here still. So we still have previous daily high, initial high of the week, previous daily high. Then we still have this high, and London just came through There's London right there. Yeah, that London just comes through and does that. I was like, whoa, it ran through everything except that previous monthly high right there. So to me, just like obvious target. We're just chilling right below it. We come back to this gap. Notice that how we come back to this gap, right? This blue shaded area is a daily gap. We come down and then we push up. Now this is New York, 10 a.m. Remember this, mark the spot, 10 a.m. right before, this is 9 a.m. right here. Okay, 9 a.m. We're just chilling right below that target. Okay, and all I'm waiting for is for that target to be hit so we can get a rejection. Because why would I want a rejection? What does a rejection give me on indices? What is that downside going to provide me on indices? Drop it in the chat for me. What is a DXY bearish retracement going to provide me on indices? With an opportunity to what? All right, we got one answer. I'm not going to read it off, but I want you guys to ask yourselves that. Accumulate. Awesome. Okay. Accumulate, push up, bullishness, longs. There we go. Yes, longs. Perfect. Okay, you guys are all correct. Yes. If I want to see indices set up for a long, you want to make sure that DXY, or not make sure, but preferably you would want DXY to be retracing or pulling back. Okay, if that makes sense. So here we're like extremely bullish. You guys can see it here. Okay, and as soon as we hit 10 a.m., and we'll just fast forward the whole thing. As soon as we hit that area, 10 a.m., boom, rejection to the downside, back to that daily gap. Okay. So now let's actually, 1 second, let me lock that. Let's go to Dow. We'll take all this off. Now Dow has been pretty bearish, moving to the downside. Between this whole range, we've been really chilling. Okay, very hard. We've been chilling very hard in discount. Notice we've been in discount for days. 1, 2, 3, 4, 5, 6 days. 6 full trading days we've been on this down discount zone. Okay, it's a lot of liquidity. Okay, so now looking at this whole range, is this let me ask you guys a question. I just didn't know how to ask it. Structure wise, so ranges, I base all my ranges based on liquidity. Okay, I can look at structure ranges. I do see those. I don't use them. All right, I only use them in particular occasions. That's not the lesson that we're going to go into today. Today we're going to focus on liquidity ranges. Okay, if you haven't watched my video Premium and Discount, I highly suggest that you do. It's on everything you guys are seeing here is already on the Inner Wealth. It's the first version of me doing everything. I will redo everything in the second version, a lot better, a lot smoother, I promise you guys, but it just will come with time, right? So for now, you know, you guys are seeing the first stages of this page, the first developments of Inner Wealth. All right, so you know, congrats. I appreciate you guys for all the love and support at the beginning and early stages of this business. And I want you guys to know that everything that you guys see here is already either displayed on a video on this channel, or you guys can ask me directly about, and I will be happy to answer throughout any of these live sessions. Okay, or you can book a one-on-one with me and we can go through it, any of the concepts you want for an hour or two. All right. So now this is my range. Why? Because this high swept this major high to the left, and this low swept this major low to the left. Okay, therefore, not just because this is structure, but because this is the liquidity point that created a I guess a shift in structure, right? So we swept major liquidity, shift, swept major liquidity, shift. Okay, so now a lot of individuals though would view this as bearish, right? We got that lower high, lower low, lower high, and this would only make sense to be lower low. Okay, that to me is not a lower low. Not liquidity wise, at least. You guys can see. Who remembers, okay, who remembers after we sweep external liquidity, what do we seek for after? After we seek for external liquidity, what can be looked for after? Internal. Cool. Yes. Thank you, Mohammed. Okay. Internal liquidity. Yep. Internal liquidity. So now, now check this out. We have taken external liquidity here. Right? We have taken external liquidity here. Okay. We have now internal liquidity, 50% and above. You have internal liquidity, which is these highs right here. Right? And down here, you have external liquidity. Now you guys will see the true reason why this right here, even though structure-wise it makes sense to be a lower low, it can't be for me. Why? Because then I'd be looking for this range to give me my internal liquidity. 50% and above would be about right here at those equal highs. That's your internal liquidity of this range. Okay? But in my eyes, okay, because external liquidity was never taken, okay, because external liquidity was never taken, I'm gonna leave that actually there, right? Then every previous high before this push down becomes internal liquidity. So a failure to create a lower low and sweep external liquidity is the whole bullish bias, is where the whole bullish bias came from today. Because you guys got to understand, we have 1, 2, 3, 4, 5, 6, 7 days, 8, including this white one right here in the back on the 5th. 8 days where we come down, sweep 8 days worth of liquidity, and then accumulate. We don't need that low yet, because we can come for internal liquidity after sweeping this external one over here. It just took us this whole like 2 weeks to create that internal liquidity setup. You see how you have to be so patient with the market? It took us almost 2 whole weeks to build that internal liquidity, create a failure to sweep external, and then come back. I mean, it'd probably be over 3 weeks before we even take internal and the whole set, and before we even go from internal to external. You know what I mean? That whole setup developed over such a long period of time. So now it's such a good high quality setup in my eyes, and I'm asking myself, setups like this don't happen all the freaking time. Every time I sit down, we're not always going to be on the right mark and in the best of environments. So I asked myself, and I'm asking you, why the hell would you trade every day that you show up, or try to trade every day that you show up, if setups like this don't present themselves every single day after day after day after day? Now that goes without saying, guys. Okay, that goes without saying. There is setups every day. 100% there is. My edge is not present every day. Not entirely. It may be partially, but I've grown to accustom myself to the entire edge. So that way I only pick very high quality trades. Right? And so I ask you guys the same thing. It's like, if you find yourself trading every day, but then you notice that it took 2 weeks to create this bullshit liquidity, the likelihood is that you were part of all that liquidity, right? And so that's where the long biases came from, is this concept of internal and external liquidity. Now, if you're not familiar with internal and external liquidity, don't worry. We will cover it so much that By the end of 2023, you guys are going to be liquidity experts. And that, I guess by all means, that doesn't mean I'm one, but I don't consider myself like a liquidity expert, but I know that you guys will feel a lot more familiar with liquidity than you ever have in your whole trading career. I promise you guys. This is the way I operate. It's just sorry, mice. You guys ever wear your devices and they're just fucking listening to you? This shit's weird. Hold on, I'm gonna put my watch away. That was weird. Anyways, so yeah. Yeah, we'll cover so much in 2023 that you guys will feel so familiar with this concept. Liquidity is truly the name of the game. Okay, so now Dow longs. Okay, the way that we've been shorting off, I've been wanting longs all week. You guys know this. Like, I've been calling out longs all week, but they just didn't want to pop off, right? Like, they just didn't want to pop off, and it's, to me, man, like, it just kept coming underneath, running, coming underneath, running. I'm like, whoa, just, pop off already. And notice how we dropped down low. Okay, we drop down here and we come so close to the low. Now understand this. Okay, look, check this out. We come so close to the low, but then watch what happens during London. By the time I wake up and look at the markets for the first time, this is what I see. Right? So you guys see this rejection to the upside. What is this? Remember what a type 2 accumulation looks like. Lower low, lower high, lower low, right? Lower high, right? Hold on. Lower low, lower high, failure to create a new low, so you create a higher low to a new higher high. Look at that. A type 2 accumulation, right? We swept all of those equal lows here, and then we had a type 2 accumulation. Okay, so because of this type 2 accumulation, then you can see that we have this mitigation candle right here. Okay, what is a mitigation candle? It's like a breaker, but a breaker would have taken out this low and broke structure, ideally. But most of all, it would have taken out that previous low. A mitigation candle is a failure to create a new low. That candle, that up close candle, so I'll show you guys where it's at. It's this whole up push right here. Boom. Okay. Whole up push right there. That's the mitigation candle. I personally only use the open of the first one, and I narrowed it down as well because I saw the high here ended up with this imbalance. So I like the fact that we lined up pretty nicely there with that order block, with that mitigation block. But really right here got my attention. So notice we got the sweep of liquidity down here. We took out all those previous daily lows. Then we get a failure to create a new low. Okay, we get a failure to create a new low. But even though we got a failure to sweep the previous daily low, look what we came back for. Look very carefully what we came back for, guys. Look at that. We came back for Asian low and we ran up higher. Okay, so we have we have higher time from liquidity, right? We have previous daily lows. Okay, so after we get higher time from liquidity, if we're looking bullish, you're going to look for higher time from liquidity. Then you're going to look for intraday liquidity. Okay, so usually Asian high or low. And then for me, guys, I personally have found it that I love to trade after 10 a.m. Between 9:30 a.m. to 10 a.m., hours straight before because I back tested my performance, and I saw that between the hours of 9:30 to 10 a.m. my accuracy was about 20 to 30%. 20 to 30%, meaning I was missing 70-80% of the time. And after 10 a.m., my accuracy, and not just my accuracy, but my average risk to reward increased from a 1 to 3 to a 1 to 5 or greater. And my accuracy increased from 20 to 30% back to 60-70% average. Right? So, guys, journal. That was a really long way to say journal. Okay? Journal your trades. Journal everything that you do. Backtest your performance. You have data for a reason. Backtest. Those of you who are journaling, now take the next step. Backtest your performance. See what works for you, what doesn't. I noticed that 10 a.m. for me does not work, right? One of my mentors actually, weirdly enough, as I'm discovering this niche after 10 a.m., one of my mentors starts mentioning ICT, Michael Hutterson. I don't know how to say his last name. Michael, ICT. He starts saying about a silver bullet trade, which is between 10 a.m. to 11 a.m. I'm sure he has a lot of videos on his YouTube page. Okay. And it's pretty cool that I'm coming across this realization, and I'm starting to see and notice other people are as well, or have been using this strategy, because these individuals have been trading way before me. They're like 30 years on me, right? And so it's pretty cool to see that concept lines up so well. Nestor's asking, do you plan to go live at those times sometime in the future? Yes, we will incorporate that as the community grows. There will be a New York session, like New York live trading sessions that I will be running. I will be running those eventually. The only thing with me is I personally would love if we reach an average of 30 views per video. Give me 1 second. Thor. Sorry, my dog was like scratching the corner, and I don't know why. He was just scratching the corner. He was gonna dig through the carpet. Anyways, yeah, so I will be going live eventually through New York. My goal is to first hit an average of 30 individuals, 30 viewers per live stream. I think that's a pretty good, easy goal to attain. The goal is to hit that within the next month. And so within the next month, you guys will be seeing a flyer for New York session. Okay. It will not be every day, because I personally like my space. I like the fact that you guys can hit me up on Twitter, but I have like the space to respond at my own pace. I do love trading live, but I also take it by the season. Okay. There will be seasons throughout the year that I will trade all by myself and no one else. Literally, we'll go through months of just trading me, and no one else. Not studying content, not studying strategies, nothing. Just lock myself into my trading, all me. And then there's seasons where I'm literally throwing live streams and tuning into the live streams with Abundant Capital and running live streams with them, right? With Matthew. And I go on and off between these two types, because I feel like my best growing moments are when I'm alone. I figure things out in trading to my style more when I'm 100% alone. And so that's where the privacy thing comes from. I'm sure that I will get to the point where I'm streaming. I feel comfortable enough to stream live every single session. But at the moment, I enjoy being on the streams. And I also, throughout this season though, I've been enjoying being on my own and expanding my growth in trading. I've seen a huge expansion of my growth since I stopped streaming live, and I can't wait to get back into it. and bring all this wisdom and knowledge and energy. Most of all, it's like the energy. It's an energy boost, and bring this energy forth to these New York sessions, right? So again, it won't, when we do start them, they won't be every day, and they also won't be forever, because I will be switching on and off. I will be doing these teachings for 2023, 2024. I don't see myself stopping anytime soon. I just see this thing getting better. That's all. I see the community getting bigger. I see trading getting better, and I see breakthroughs coming through. Okay, coming for all of us, right? Not just the students that are tuning in, but myself too. I am a student. That's what you have to realize too, is like I'm still a student, and I like my season of student. And then I'll go into the season where I'm teaching a little bit more. But yeah, right now I'm in the season of focus on me, So anyways, wow, a lot of comments. I'll catch up here in a second. That was a really good question. So yeah, I will be going live for New York. If you would describe one thing that boosted your performance a lot, what would it be? This is something that I have to share with you guys. If you haven't done this yet, guys, go a month, like take a month off from like live streams. Most guys, throughout the first few years of my trading, all I did was study, trade, study, trade. And it was exhausting. The whole point of trading is to own more of your time. Not be glued to the fucking chair, desk, phone, screen, right? So the whole point of trading is to own more of your time, right? Instead of your time being owned by XYZ, okay, being governed by all these external components. And so if I can honestly tell you guys, one sec, something that really changed it for me was shutting everything out. So what I did early, like maybe 2 years ago, I do this every year. This year I haven't yet to do it, but I will be doing it. I don't know when, but at some point this year I will do it again. And I go a month. Literally, like I already have my own space, but you guys see me live on Twitter, right? So I share my ideas and everything. But there's phases that I've gone through previously where I shut everything out. I took a 10-month social media break. From all social media. Now, all of it. 10 months. I didn't have any social media. All I had was Telegram. And Telegram is a form of social media, technically speaking. Right? But out of those 10 months, there was 1 month where I shut out even Telegram. And I showed up to the charts every single day. Traded, journaled, all the time. I stayed up with it, and I was getting my ass handed to me. But I got my ass handed to me by myself. And guess what? I congratulated myself. I failed. Congratulations. You've reached failure. A lot of people may take that so fucking offensively, but when you're at the gym, when you're pumping it, what do you want to reach? You don't want to just pump it and pump some easy ass weights. That's not how you're going to get stronger. It's not how you're going to get better. You want to get to what? You want to reach what? You want to reach failure. Because what happens when you're working out and you reach failure, a point of failure? You push yourself beyond your limits. You're expanding the limits of your strength. Right? You're expanding the limitations of your strength. Right? So failure is the mentality you should be so good at failing that when you get there, you realize that that's exactly where you should be. Is go fall on your ass by yourself. And that's probably the best strategy. Sorry if I'm being so blunt. But go fall on your ass by yourself 100 times. And then that 101st time, 101 time, a breakthrough will happen where everything that you've been attempting to attain or learn just comes rushing to you. Guys, some of my biggest breakthroughs in trading were not even in trading. They weren't during meditations. They weren't during journaling. They literally just fucking come. It's not like I sat there and I was like, okay, breakthrough. Oh, breakthrough. No. It literally just happened over a period of consistency, solitude. Okay, don't confuse loneliness with solitude. Those are two different things. Very two different things. And most often people have those confused. Most people don't want to be lonely, but don't understand that elevation requires separation. Sometimes it's the best thing that you can do for your well-being and your state of mind and your peace is to cut out the noise, man. Turn off the noise, the background. Cut out all background noise. I promise you, like, best thing that you can do for your trading is taking a break and falling your ass all on your own. You will learn more by falling on your ass than you will ever during a course. Why do you guys think I don't sell a course? Why do you guys think I put everything free on YouTube? Because it's not the course, it's not the content, it's not the strategy. It's not. Right? It's your experiencing versus the market. With the market, that's going to teach you the best. Because we could all know the same information but achieve way different results. And that's literally what we have. We all are learning very similar concepts, but we all achieving different results. And why is that? Right? You have to understand. So that boosted myself a lot, is how much I consistently kept going. Yeah. Let me get back to the charts for a second, and then we'll continue this conversation with all the other questions. So anyways, okay, guys, sorry to deviate so much. So we cleared the low. Okay, we get a failure to create a lower low, right? We'll get a failure to create a lower low, right? It's the same thing that we saw in DXY, except now DXY, we're gonna wait for 10 a.m. Guys, 10 a.m. 10 a.m. That's where this whole talk went from. 10 a.m., right? We got the mitigation block right here. Let me go ahead and put that highlighted there. We got that mitigation block here on the 15-minute redefined, and we have an imbalance right there. Now, where these two overlap, that's where I'm personally going to be aiming for. Right? We have that the low that swept liquidity, created an insufficiency, right? So I'm going to put my entry, so at 10 a.m. Remember, 10 a.m. Boom. I'm going to put my entry around 10 a.m. Okay? Stop loss below the low, the imbalance, where these two overlap. We're going to have some rejection to the downside. We come into my area. Now, understand that I'm not in the trade yet. It's not 10 a.m. yet. Remember, I only get in after 10 a.m. And I took my first trade like this, guys. Just like that. Okay? When 10 a.m. hit, that's how I took it. Boom. Right there. I took it just like that. We hadn't taken the low. We came back into the breaker. I took my first entry just like that. And then you saw 9 a.m. Look at this low right here. This is the 1 hour. So you saw the 9 a.m. low right there. I wanted 9 a.m. to get taken out. And that's where I took my second and final entry. Same stop loss to that high. Right? 2 entries, 1 setup. I held this full volume to this high. Full volume on both entries to that high. The re-entry, this one right here, I closed completely at this high. The other one I left running to that previous daily high. I took some off over here, and then I left super low amount to that previous daily high. Right? Super simple setup. This, guys, was my first setup of the week. Up until 10 a.m. Remember what happened? 10 a.m. What happened at 10 a.m. with DXY? DXY, 10 a.m. takes out that high. Major liquidity. We can anticipate rejection from a major liquidity. That's a major level of resistance for price. Remember, my orange lines are support and resistance. Every institutional level is just support and resistance. Every institutional level, all it is support and resistance. Okay? And so this is a major level of resistance. So you can anticipate rejection or struggle, price to struggle when it gets there. And so it only made sense to go long then when we were ready and I already took out that high. So 10 a.m. comes, takes out 9 a.m., comes into that mitigation candle, mitigation block, into the imbalance, sweeps 9 a.m., pops off, runs for the highs. Right? Perfect accumulation schematic. Type 2. Beautiful type 2 accumulation schematic. Guys, you don't need, honestly, if this is the only trade I take this week, like I'm fine with that. You know, if there's something else that shows up this week that's, you know, as attractive and has, you know, my edge present, then yeah, I will take and participate again. But until that happens, I'm going to take my time, taking my time, I guess, right? Like, you guys have to understand. Write this down. Write this down for me. Write this down. When it is not necessary to do anything, it is necessary to do nothing. Hold on one second. Let me do this real quick. Okay, cool. Okay. I don't have my gauges on. Damn. Okay, cool. So when it's not necessary to do anything, that's when it's most necessary to do nothing. Okay, you guys have to understand, and that's a breakthrough that I hit this year hard. I was taking about like 6 to 10 trades weekly, right? And now I'm only taking literally 1 or 2 to 3 setups weekly. Maybe pulling it about an average of like 5 to 6 times overall, but just 2 to 3 setups weekly. Maybe just 1 this week. We'll see, because Friday we have some really good news. Gonna hit Jay Powell, your boy Jay Powell is gonna speak, so testify. So you guys know what happens when Jerome Powell does this thing. Anyways, so yeah, guys, just so you guys are aware, when you hit that realization that the only reason that you want to trade more is because you think you're going to make more money, because that's how life has set us out to believe, that the harder we work, the more we will achieve. But it's truly not true. That it's just a belief that is not even yours to begin with. When you realize that, you're going to free yourself from a huge paradox that you've been stuck in. The more you chase the outcome, the further it will get away. The more you allow things to come to you, the more you will get to keep and enjoy. Remember, time freedom. How much of your time do you own? The goal is to do less, right? When it's not necessary to do anything, don't look for anything to do. Don't look for something to do. Don't look for something to trade. When those moments come, it is necessary to do nothing. Right? because at the end of the day, you guys have to understand that you can do so much less and become so much more. So guys, write this down. It's going to become our new motto. Do less, be more. Do less, be more. All right? I really wanted to make this a short clip just because you guys already know I like short, simple videos. I will be getting to the comments here. But yeah, drop some 7s if you guys agree with everything. If this all makes sense, if the trade was, understandable, like the analysis made sense. If something didn't make sense, this is the best time to ask. But yeah, drop in the chat. Cool. I'm glad. Thank you guys for being here. I really, really appreciate you guys being here today. So another question that we have is, how often do you go live on YouTube? Every single week on Tuesdays. Every single week I'll be going live at least like once for sure, twice lately. Once for sure every technical Tuesdays. That's on the schedule. And you guys will see videos. You guys will either see a second or third video from me, a recording, a trade breakdown. And you guys will see me active on Twitter. If you want to see me every single day though, Twitter. I promise you guys. If you don't have Twitter, now you have a really good reason to grab a Twitter. I'm telling you guys, like I'm showing everything that I showed you guys today. I showed it before it played out, all on Twitter. A lot of the students have the notifications on, so they don't miss stuff like that, guys. I'm not here to blow up Twitter or anything. I'm just here to share my narrative. So if you guys want something a little more live, Twitter in the meantime. As we grow the community, I will be going live on YouTube for New York sessions once or twice a week. It is something that I would love to be doing, especially for the community that's growing. You guys are awesome, and you guys are growing yourselves too. So yeah, that is something that we can make happen. And I'm listening to the community. If you guys want more lives, I will go live more often. If that's what we want, that's no problem at all. I think that's exciting. You know what I mean? Like, going live is cool. These sessions are really, really inspiring, and they help me more than you guys could ever imagine. Harold, brother, how are you? Harold asks, how and where do you make your journal? So I journal through Notion. Okay, guys, I journal through Notion. Let me open it up real quick. One second. I journal through Notion. That's, I guess, the basic understanding that you guys should have. There is a video on YouTube that I go through. It's on the ABCs or Smart Money Concepts playlist, and it's called Journaling on Notion. Okay, I go through my whole journaling process on there on Notion. Now, if you're talking about trading journal, Notion, personal journal, I write. But yeah, you can't succeed without a failure. It's the first step. Yeah, 100%. 100%. Couldn't agree more. Yeah. How much risk you took on your first entry and second? How much risk did I take on that first entry? So how much is that? 900. So it's 0.7 on the first entry. 0.6 or 0.7 on the first entry, and then another 0.6, 0.7 on the second entry. I risk about, I guess, 0.6 to 0.7% is my range in risk. I don't have a specific risk. I have a range of a small range of the difference of $100 range, because in futures it's a little bit different. I'll explain futures trading in the future, but not on this lesson. So, but that's because that's why I have a range. So I did drop each entry. Got the first one got my regular percentage, and then the second one also got my regular percentage. My daily drawdown is 2%. I'm okay with 2% drawdown. I never hit it. I never even get close to it. I'm the most comfortable, like, I'm down to lose in one day is like 1%. And even that, like, I'm just like, ugh, I don't want it. Yeah, so I'm very conservative. I take my time with trades, and I much rather go in, get a trade, and not go break even, because most trades come back, get you break even, and then they do something like this. And it's like, whoa, you missed that whole move because all you did was go break even too soon. You know? So personally, the way I manage my trades is I literally left. I went in. This created a higher high. I saw this imbalance right here. Once that imbalance was created, and we had created a new high, meaning that this high right here was taken, right? That shift in structure was created, not just the break. Remember, the break is whatever. It's the liquidity, okay? Once we took out that high, shift the structure, notice how we come back for internal liquidity into that imbalance, right? So once we swept this high right here, this high right here, once we took that one out, my stop loss went from, all right, my stop loss went from here. Once we created that imbalance and shifted that high, it went all the way up to here, right below that and the low of the imbalance. It was like about right here. Yeah, somewhat in profit, because now this imbalance became my new level of support. And if I'm in the right direction of bias, this imbalance should not be violated, especially because it swept the previous hourly low, swept liquidity, and then it started doing its thing, right? So that imbalance became my new level of support. But I mean, personally, guys, I didn't go break even until I took my first partial. Notice we didn't come back here till the high was taken. Look, the high was taken before we even came back. I didn't go break even until I got out of there. Most of it was already taken out, you know? Besides that, I left my stop loss alone. Because if I would have gone break even on the first entry, I would have effed myself. It went in profit. Don't get me wrong. We did go in profit for a little bit. But then we dropped down one more time. And if I would have gone broke even, I would not have made nearly as much as I did today. Right? And then, therefore, because I didn't make it as much as most people say should have, right? Most people get in this should. So start shooting all over themselves. So because I didn't get the trade that I should have gotten, then I have the need and desire to want to go out there and expose myself to more trades because I should have had a better day. And then most people start shooting all over themselves. But, you know, you learn through those moments, you grow through those moments, and then you learn not to do them again. But I didn't just learn to hold trades just because I got, you know, just because fucking diamond hands over here. Like, nah. Like, I used to struggle with holding on to my trades as well. I still do. Right? But it's something that you guys gotta understand. It's like, you have to go through that and grow from it. Right? So, anyways, yeah. Really good questions. We need to embrace the process. Yes, of course. How can I anticipate a break of structure or a change of character? I'm guessing that's what chalk means. I could be wrong. How can you anticipate a break of structure or a break of structure? The best example I can give you is, for example, on Thursday. Check this out. Look at this. We didn't break that high, but look how far if this was the institutional candle that was to turn this bearishness down, look how far we traded into that candle. Now, it's okay to trade into candles, but if they close, if you don't show any level of rejection, if that area didn't show any sense of support, any sense of resistance for price, support or resistance for price, the likelihood is that we're going to just fly through that. Because look how much, yeah, we didn't close above, but it was still way up this range. And if we would have gotten a rejection, it would have came already or shown itself to us already, right? The screen is showing my face. Jeez, I'm so sorry. How unprofessional of me. That's embarrassing. I went through this whole thing. It's all good, guys. Live and learn. All right. DXY. I get it. You guys probably think I just wanted to show my face. All right. So DXY. Oh man, I broke that whole thing down on Dow Jones with my face there. Jeez, I suck. I'll go back. I'll go back. Okay, so this is how you anticipate a break of structure right here. Okay, is even though we didn't break, you can tell that this zone is not going to slow down price. Why? Because we didn't just trade into it, but we traded into it and closed there. So sometimes a way to anticipate a break of structure is the best thing you can do is wait. Maybe you won't see a break, but you can tell by the candle bodies if something is moving to the upside or not. Like this body candle, it's okay if a price action trades up, but if it trades up and closes up there, the likelihood is that we're just going to continue in that direction, that we have an objective to hit, right? A liquidity objective. That's how you anticipate them. It's just like, you know, yeah, it's bearish on structure, but liquidity wise, we are heading towards that high. Look at that. Look at that candle. Look how aggressive we pump up. You got to ask yourself, where's the money? Boom. I don't know if Jenna, she does her lives anymore, but Jenna's the one that taught me that. Jenna, I don't know what her name is. She's from Trade House, Australia. She's in, I believe she's still in IM Academy, but yeah, she's the one that taught me that. Where's the money? Damn, that's so funny. We didn't see anything I did. That's so funny. I'm laughing pretty hard right now. I'm not gonna lie to you guys. Okay. So you guys didn't see a damn thing. That's so funny. All right. So you guys see this right here? How I broke down the trade? This is where originally my stop loss was, okay? And once we created this imbalance here, right here, and this break, I moved my stop loss from, I'll make a fat red line. I moved my stop loss from here, from that 15-minute low to now the new low that swept liquidity and gave me a new level of support. Because we didn't just sweep liquidity, but we swept liquidity and rejected to the opposite side. So now that becomes my new level of support. And I usually tend to use the bodies if it's a large body candle. Okay. Then once and only once we took out this high right here, this one, right? This one that was created at 10:05, that high. Okay, that 15-minute high. Once we took out that high right here, so at this point in the trade, oh shit. At this point in the trade, I'm okay to go break even. My entry's right there, and I go put my stop loss below the low of the imbalance, because that low, that imbalance should be it should be respected. That is a new level of support, right? It was confirmed once we created a new high above this previous high. Okay. Unfortunately, I wasn't home when this happened. I got back home after I took my trade, and price was literally right here, and I was going to move my stop loss, and then this happened. Boom! It was like super fast. I don't know what the hell happened, but it happened super fast, and so. Yeah, I still went break even there. But it was after I was already out 80-90% of the trade. Like 80-90% of my trade was closed out at this high. And 80%, because then I closed another 10% right up here at 33 whole level, 333 at 333 whole level, 33,300. Yeah, that whole level I took some off, and then yeah, I held the rest for that previous daily high, right? And that's how I trailed my stop loss. You know, I didn't move my stop loss anymore before on this, but here on the right, you guys can see how we created a new higher high on the 1 hour. Now this 1 hour swept that previous 1 hour low, so I would feel comfortable moving my stop loss below that 1 hour low, which is this one, which also came into that level of imbalance, swept this previous low right here, and then continued pumping to the upside, creating a nice level of support. That's how I trail my stops. If that doesn't happen, my stop loss stays in the original spot. You guys gotta understand, if I'm entering a trade, I have to trust my edge, because otherwise, why did I enter? If I'm not gonna allow my edge to fully roll out and tell me whether it was correct or incorrect, or it served me or didn't serve me, why am I putting a stop loss? Why am I entering a trade that I feel like I might lose? You know what I mean? Why am I, if you feel like it's too much risk, then risk a lot less. Guys, I didn't start with as much risk as I'm risking now. My first challenge ever, I passed it with risking 0.25% of 100,000. I was using $250 trades to pass and meet at $8,000 requirement, and I did within 2 weeks. So, for anybody that thinks that you need to have bigger leverage or bigger risk to make bigger money, I can guarantee you're incorrect. Or I can assure you that this is not the case. That doesn't have to be the case. It may be your case, but it doesn't have to be that case. All right? So that's how I managed it. Yeah. That sucks, man. Imbalance aren't respected and get played through. What can we anticipate? Let's see. Bro, your screen is blocking the view. Sorry about that. Super embarrassing. When imbalance is respected and gets played through, what can we anticipate? When an imbalance gets traded through. So, for example, let's go to NASDAQ. This is probably like the best example that I can give you guys. When an imbalance, write this down. When an imbalance is traded through, it doesn't make it balanced. When an imbalance gets traded through, that doesn't make it balanced price action. Okay? And I can show you guys examples again and again and again when imbalances played out multiple times. Okay, let's see. I honestly, we can find it anywhere. I was just trying to find, for some reason I was trying to find like the most specific answer, but example. But honestly, there's a lot of examples here. Here's an imbalance from that low to that high right there. We come into it once, we trade above it, and then we hit Asian liquidity. Then we come below it again, hit liquidity, and then we fly from there. Notice that imbalance got played out twice. Now, something that shows me that, hey, like, we're going bullish was the fact, okay, that we had these down closed bearish imbalances. We had bearish imbalance here, and look how we traded right through it. Disrespected it. We had this bullish imbalance here, and we rejected away from it. Then now again, we have another bearish imbalance here. And look what happened. We trade right through it and close above. Zero signs of rejection, zero bearishness whenever we traded through those imbalances. Yet the bullish imbalances are being respected, right? So by the time you wake up here, notice bullish imbalances being respected, bearish imbalances are being completely disrespected. Now, just because an imbalance has been traded through doesn't make it balanced price action. Okay, so now where do my two imbalances overlap? The bearish imbalances is right here, and so that's where they overlap, is right there. Look where we come back down to. Imbalance, just because we trade through it doesn't make that price level balanced. It actually takes a couple of trade throughs back and forth to actually balance price action back out. Okay? Traded through imbalances are not balanced price action. How do you use big figure numbers with your analysis? I'm not sure. Oh, whole numbers? I just see them. So like if my target is, for example, Dow, if my target was previous daily high, I'm going to look for the whole level that's like really close to that. So previous daily high, it was 33,400. So you guys saw that? 33,400. Right? Previous daily high is right below that. 33,397. So then I just round it to 33,400 because the market tends to go for whole levels. Now, if 33,400 was clear the F up here, hell no. No, it has to make sense. It has to be very, either if it's above it, very close. If it's below it, even better. Right? Because I went for 33.33. Yeah, for 33,300. That was the other one that I went to. It's the opening right there. Boom. You guys see that opening of that candle? That's 33,300. That's that whole level that I took partials of out on. I took partials here, here, and previous daily high at 33,400. That's how I use them. Anyways, really good questions, guys. We're gonna wrap it up right there, given that we've already been here for over an hour. I don't want the recording to be too long for you guys, but I appreciate you guys tuning in. I appreciate everyone being here day after day, week after week. We're growing as a community, we're growing as individuals, and I appreciate every one of you that stay in and come back to learn, listen, and grow. It means the world to me that we are all doing this together. So I used to trading used to be a very lonely thing for me. Like I didn't have anybody to talk to about trading. And so I committed myself to creating a trading community that I can speak to about these things. And this is my passion. I love trading. And so you guys can see, like, it's something that drives me, inspires me, and I want to continue to share what inspires me and what drives my passion with the whole world. I will continue to share these things because it's an amazing feeling being able to share a perspective, someone take that experience and be able to benefit from it, even if it's in the slightest. So anyways, appreciate you guys. Take care. Have an amazing one.